It's great to be here talking to folks. My first time at this conference and just going around talking to people, it's just really impressive, how much it sounds like it's grown over the last couple years, how much energy I've seen with 500 people selling out the conference. And I think I'll get to this a little later on, there's a reason why QED is so interested in Latin America in general, Mexico in particular, and I think this conference is a great representation of what I'll get to later. Let me just start by asking for a round of applause for the folks at Finnovista, I think, for giving us this day. I was asked to cover a topic, which is what is going to be the state of financial services in 2020? And I kind of said, sure, this gives me a great opportunity to talk to all of you. It's a subject I think about a lot, where are things going and what's going to be the state of the future. And then I sat down to kind of write this presentation, and I realized, look, I have no idea where things are really going to be in 2020. That's a pretty precise date to pick something. And honestly, it's only 3.5 years from now. And you know what? There's a lot of change going on in the world, and you entrepreneurs are building stuff incredibly fast. And you banks are changing your mindset really fast, and you're trying to work with entrepreneurs. But industries change very slowly. And so, we're sitting here in a world where the top handful of banks control 80% of most banking services. My guess is in 2020, it's not going to be materially different from that. But what I think you're going to see is a lot going on behind the scenes and a lot going on to transform how products are done and a lot going on to create, great things for consumers. And so what I thought I'd talk about instead of predicting the future is really a handful of underlying trends that we're seeing around the world and those that apply very much to Latin America in general and to Mexico in particular. But what I thought I'd start with is a little bit of a commercial on QED, both because, that's what you're supposed to do with these things. But I also thought that would give you a little bit of context into who we are and why I'm talking about some of the things that I'm talking about. And I think I've got some perspective that's going to be pretty useful on some of the trends that you've heard about today, and I'll talk about here in a minute. Essentially, QED is an early-stage venture capital firm investing in very young startups. And we have 5 partners, and we are an important part of the team that helped build Capital One, which, as we look here today, was probably one of the top handful of last generations of FinTech startups, and one of the few companies that was able to kind of get enough escape velocity to remain independent and retain a company. However, I think all of us came to this realization at different times and at different points in our career that we had a whole lot more fun building Capital One than we had running Capital One. And some of you, I know Jackie just talked about, having seen kind of the venture world and being in a big bank, and some of you have moved back and forth. It takes different mindset, different skill sets, different approaches, to work for big banks and work for startups. And I think, the 5 of us on this page collectively just decided, we had a little bit more fun building it than we had running it. And so let's try our hand at something new, and let's try our hand by sharing the lessons that we learned from last generation of FinTech and help some of the new entrepreneurs, build the next generation. But at the same time, how do we learn as much as we give from these entrepreneurs? The companies we invest in are doing way more incredible things than we ever did at Capital One. And I love seeing the next generation build upon what the last generation was able to accomplish. But it does give us a pretty unique perspective among people in the industry, where I think I was adding up in my head, we've got about 70 years of experience between the 5 of us working in what's now a very large bank. And we've probably got 40 years of experience working in either startups ourselves or the venture capital industry or working with startups. And I know one of the main themes of the day, especially this afternoon, has been around this collaboration and how big banks work with startups and how startups may need to work with banks and how does this ecosystem work. And I think we've got some pretty unique perspective on that. I do think you can see sort of the things that we tend to focus on, et cetera. But here's my one-page commercial on the success we had at Capital One. I think it went pretty well. You can see, we grew earnings nicely, we grew stock price nicely. But I do think this slide is instructive, right? Because while on the left, hey, our business did great, it looked smooth, it looked like every day was a piece of cake and everything was growing. But at some point, people didn't always recognize that the same way along the way. And I think that's actually a wonderful lesson to those of you who are startups, which is, you can control a lot about your business, and I hope some of you come and create businesses that are incredibly successful and have some picture that looks like that on the left. But it is amazing how much you're at some level at the mercy of the capital markets. In this case, we're showing stock price. In some cases, we'll show funding for debt. In some cases, you can look at equity funding. It is pretty amazing how choppy and tumultuous this stuff is. And I think it's something banks understand quite well. And I think something that the fintechs eventually will need to learn from banks and hopefully get from banks. But as excited as we were about our Capital One days, we're probably as excited or more about our days at QED. I've got a selected list of investments up there. Today, we are almost exclusively investing in fintech. Back in the early days, we did some non-fintech stuff that I didn't bother to put on the page. But we've, got a nice little portfolio here. Very heavily concentrated in lending, as I said on the last page, but not exclusively. And insurance is one of the areas we're particularly excited about going forward. And in fact, we partnered with a conference firm to help found an insurance conference, which is going to take place for the first time in about 2 weeks in Las Vegas. But what you can see is throughout 2013, 2014, our investment in US lending really started to slow down. And we did a couple investments in 2014 in very specialized lenders doing very unique things that were somewhat niche plays and have been very successful. But just as the lending world started to explode in America, that's kind of when we pulled back. And I've had this experience of talking to a number of you throughout the day of how exciting it is to have this conference of about 500 people where it's clear there's energy in the room, people are excited about it, but it's not so crazy that you look at it and say, you know what, this thing is past its peak and it's never going to work. And you can sit at some of the US conferences that deal with lending and pieces of fintech, and you can just get the feeling that it's kind of past its peak and things may not necessarily go well from here. So I think what you saw us do in 2014 is to change some of our focus to some non-lending things in the US, a number of investments in the UK, which I've put up here with ClearScore and Future Finance and Zopa. But also, most importantly, the ones that I've boxed in is our Latin American portfolio. We had the privilege of starting this off a little under 2 years ago in Brazil by investing in Nubank. And I'd love to say we had a grand plan on why Latin America was great and why we wanted to start with Brazil and then come to Mexico a year later. Candidly, there was a lot of luck involved. We happen to know David Velez, the founder of Nubank. They happen to be starting a credit card business. So we kind of said, hey, this is a good situation for us. We don't know anything about Brazil, but we can learn as we go. And I'll talk a little bit more about why that's been such a good experience and why we're so excited about Mexico having built on those trends. But it's been a fun couple years building our Latin American portfolio, and 2 years ago in Brazil and about a year ago here in Mexico. So what I'm going to move to is really these trends that I talked about. And I think, having sat through a number of the sessions throughout the day, I don't think I'm going to say anything that nobody else has said so far. So it's actually good. If I'm the last guy giving the recap, it's good that I actually give a recap, as accidental as that may be. But the few trends that I'd like to talk through, one is just the radical customer experience improvement that's going on throughout financial services, kind of why that's happening and where we see that going. There is definitely a trend going on of either lower prices or more access to credit, or in some cases both. I probably have heard the term financial inclusion at least 1,000 times today. This is kind of my version of that, and I'll show you kind of our perspective. We're clearly seeing that ideas are spreading very quickly around the world. And I think that you guys here in Mexico are benefiting tremendously from that. And I actually love the position you're in where you can, if you're starting a business, you can kind of steal 70% of it from other people who have proven it, and then just figure out the last 20 or 30% that's customized to the local market. And then the last topic, one that I think was the subject of most of this afternoon, was big banks, small companies, how do they work together, where is that headed? So first of all, consumers love FinTech. It's a pretty eye-catching slide of picking selected startups, selected banks. I'm not really going to show you a whole lot of data from Mexico today. I'm going to show you data from a number of places around the world. Now this chart's totally unfair, and those of you sitting at banks probably are saying, wow, this chart's totally unfair. These FinTech companies have to do one thing and do it really well, and you banks need to do 5,000 things and try to do the best you can. I've kind of lived in both of them. But what I do think is your customers are seeing these net promoter scores of 70-some-odd% from some of the best FinTechs, and they're going to be expecting that, from you guys at banks. And so as these companies get more complicated, as they start offering more products, as they start doing more things, as technology 10 years from now is no longer the latest technology, these scores are going to fall. As the banks start investing in more and more programs and do more and more pilots with startups and invest in their own tech, those scores are going to go up. But it is pretty dramatic why FinTech is actually gaining traction. It's because of scores like this, and customers love the offerings that are out there in many cases. This is absolutely coming here. And this would be my first chart on why we're so excited about Latin America. The reason that net promoter scores are so good for companies like Nubank or companies like On Deck are because of the digitization of the world. And the U.S. may have been there a few years ago, and Latin America may not have, but it's absolutely there today. I think I've had conversations where both in Brazil and Mexico, there's now more smartphones than there are adults in either country. If that's correct, that's a pretty insane thing to contemplate. But if 5 years ago, just the ability to innovate in this way didn't exist in Mexico, it sure does exist now. Facebook's incredibly penetrated. I didn't even bother to show WhatsApp, which is probably higher penetrated here than anywhere around the world. Customers are doing more and more digital, engaging with social media. Now that hasn't necessarily translated into how they use financial services yet. It's still a very cash-centered place. It's still a very underserved place by the banking industry. But we're seeing this take hold around the world. We're seeing all of the parts sitting here in Latin America in general, in Mexico in particular. And so the time absolutely seems right for this type of customer experience innovation to take hold. My next comment is around price and access. And it's pretty clear to us as we look around the world across a whole range of financial services that there are so many examples where customers are paying way too much. And I think that's one of the great roles that FinTech can play is crashing price umbrellas. I've got the most outrageous of those that I've ever seen in the world on the left is Brazil. Credit card average rates of 300 some odd percent, installment loan rates of 120 some odd percent. Ironically, mortgages are actually really underpriced. If you think if the central bank rate is 14% in Brazil, mortgages are actually below the central bank rate, which is another kind of bizarre thing. I don't think prices are anywhere near this high in Mexico, but they're still pretty high. But you see things like money transfer, and this is one of our portfolio companies, Remitly, who's recently come into Mexico, an example of trying to use technology and use efficiency to crash the price umbrella in the payments world. But you see examples like this over and over where banks have kind of had some legacy pricing. They've been able to use market power to keep pricing high. And I think one of the roles that FinTech can play is to help crash some of those price umbrellas. Capital One honestly built almost our entire first wave of growth around crashing the price umbrella in credit cards in the U.S. And now credit cards are unbelievably cheap in credit cards. But the topic that's been talked about that kind of goes hand in hand with lower prices is more access. And I think financial inclusion gets talked about a whole lot here for good reason. But I also want to show an example from the United States where it's not just limited to the emerging world. We all know about mortgages and the role that mortgages played in the financial crisis of 2008 in the U.S. But what's amazing is if you divide mortgages into people with great credit or people with terrible credit, it's really a tale of two cities. Right? I mean, people with great credit, if you looked at that slide and just had to pick when did the Great Recession happen, you would have no idea. Nothing actually slowed down. Maybe there's one data point for one quarter that took a little bit of a dip. But people that have excellent credit have never had a problem getting mortgages in the U.S., even in the middle of 2008, and don't have trouble today. What's pretty staggering is people with poor credit, and again, this is a 660 credit score. That's not necessarily terrible credit, so people with kind of not perfect and then worse. I mean, that's an unbelievable story that's taken place in the U.S. Not just that it fell so fast, but it hasn't come back. And honestly, it's not coming back anytime soon unless there is substantial innovation to figure out how to do this better. Now, you could probably argue that it was too high before the crisis, and that's the reason why the crisis happened. But this notion of financial inclusion and people left behind by the system, is absolutely true in the United States, as it is around the world. I didn't show a picture of unemployment, but I probably could have shown the same picture for unemployment. And people that are well off in high-paying jobs probably barely took a dip in the middle of the downturn. People that had low-paying jobs, hourly jobs, have cratered and still haven't come back in any material way. And I know one of the favorite people in Mexico is Donald Trump. I'm sure he's, you guys are a big fan of him. But it's phenomenon like this that allow people like Donald Trump, as outrageous as it is, half the stuff that comes out of his mouth, that's the reason that a character like that can come and get traction. Because you really do see, even in the US, kind of a tale of two worlds. People can get mortgages, people have jobs, people are well off, they kind of are, don't even have a blip. And then there's a whole set of population that's kind of been left behind by the crisis. And I think when I hear all of you talking about financial inclusion, it's not the same story, but it's the same outcome. You've got people that are doing their banking digitally and have smartphones, and there's a bunch of people being left behind. And I love the fact that a big part of innovation is providing access to these financial services products, in all of these different countries. One of the top themes that we at QED are spending our time on right now is this notion that ideas are moving around the world really fast. Internally, we kind of call it geo-arbitrage. If I take a business that works in the United States, what are the odds that it's going to work in the UK? It's probably 90%. Maybe once in a while a business isn't going to work and probably needs to be customized a little bit, but it's probably going to work. The odds probably go down a little bit if you take an idea from the US and bring it to Mexico. It's a little more different in terms of markets. But generally speaking, we've come to realize that many successful business models, if you export them to a different country, 70, 80% of the idea is probably going to work, and 20 to 30% of it really needs to be customized for the local market. And so we don't tend to be a big fan of players that just literally cut and paste one business, move countries, and expect it to work. And we've certainly seen some of those out there. But we are big fans of people that steal shamelessly from what works around the world and really tries to figure out what is the local problem that needs to be solved, what might not work about that model, and how do we customize it. And so, I've just put 3 examples. I could have added small business onto this. I could have, added a whole bunch of different examples. But I think you can see the commonality of some of these plays as they move around the world. Yet, a number of these things do have important differences as they go. And so, for those of you who are starting businesses, I think you're making a big mistake if you're not stealing shamelessly. But this doesn't mean that local innovation doesn't happen either. Right? So the problems that exist for consumers in Mexico aren't the same problems that exist in the UK or the US or in many cases Brazil. And so there are very interesting local plays that we see too. One of which we've invested in is Bank Fácil in Brazil. They're pursuing a business that would have no prayer of working in the US because I think they're solving a very local problem using secured lending in Brazil in a very innovative way. So it's not that there's not a role for truly breakout innovative models in other countries, but I think they tend to solve very local problems, and then maybe those get applied elsewhere in the world. But we are seeing these ideas flow really fast, and I think it's a great thing for financial innovation in general. And so the last one of my themes is around big banks and small startups. And I would probably describe my presentation so far as pretty pro small startup. But you know what? Big banks have a whole lot going for them as well. Just ask Lending Club and Prosper. How much that big banks have going for them right now. What's pretty clear to me is that if you're a startup, you can get to a certain size and get funding, right? There's people like me in the venture capital world. There's bigger people in the private equity world. There's people like Victory Park willing to give you venture debt. There's a bunch of players at hedge funds willing to lend you money. But at some point, financial products get big enough, the only way to get funding is deposits. It's been true for probably the last 500 years in banking is deposits are how you fund loans. And I think all of the creative innovation that's gone on in the world on different funding models absolutely works to a point. And I can tell you with 100%, Capital One hit that wall. And the only reason Capital One even exists today is we decided to go buy banks and get into the deposit business and fund it ourselves. And so, there's going to be a bunch of choices for fintechs in the future of how do they deal with that. On the flip side, and so big banks have a ton going for them. Cheap deposits is by far number one on my list, but huge customer bases, regulatory access that fintechs don't even need when they're really small. When they get really big, the regulatory burden gets massive and surprises every single one of them. Big banks are used to dealing with that. Massive marketing budgets, massive investment budgets. And so one of the big themes of what we as a firm spend a ton of time talking about these days are how do you get 2 + 2 = 5? How do you get fintechs working with banks so that they can leverage the advantages that banks have? How do you get banks working with fintechs? We just heard, I think, 3 consecutive panels talking about why that was important. But it's one thing to get this conceptually, and it's another thing to live it. And I'll be honest, I have not seen the collaboration yet that I think has figured this out. Routinely, startups can't handle dealing with big banks because one startup CEO has to deal with 15 people at the bank in different departments, and they have no idea how to do that. Big banks kind of go and think about, hey, I might want to invest in a startup, or I might want to do an incubator, and the 17 compliance people that have to review it, and the 5 committees it has to get approved by, even after the CEO has already said go ahead and do it, just doesn't work in the startup world. And so what I love is the fact that there's lots of startups and lots of banks that are realizing that collaboration is a good thing. I think we've not, in any example I've seen, quite figured out the model yet. But I think the more we keep trying, the more we'll keep learning from each other, and we will figure it out. And I think in the world of predicting the future, I think the lines are going to blur a lot. There's some people out there starting fintechs that may get lucky enough as Capital One or Quicken Loans or some of the firms that really made it from the last generation, but it's going to be a small number. It's really hard to go from a startup all the way to kind of a big dominant bank that's going to last a long time. There's definitely going to be some M&A activity, and that's, hopefully a lot of that activity happens when the startups are really hot, and the banks decide to buy them that way. Some of it may happen when the startups stumble and the banks, realize they can get a platform for the cheap. But I think in the interim, there is a huge role to play for partnerships, and really figuring out what are the assets that banks have, what are the assets that fintechs have. There's probably a lot of advantages to them remaining separate, so that the ideas don't get squashed by the infrastructure of banks. But one example that was announced last week in the US was a partnership between Fifth Third Bank and GreenSky, probably 2 companies that no one's ever really heard of. But it was an interesting model of an equity investment in a really exciting lending platform, a large commitment of lending capital, the ability to license the technology from GreenSky to help make loans better within Fifth Third Bank. So there are some examples of some really interesting partnerships happening. And that's a company that was valued at $3.6 billion. So this is no longer a small startup. This is a big startup that kind of realizes they need bank deposit funding, and the bank realizes they need all the quality tech that the startup provides. So totally encourage these dialogues that happen this afternoon to continue. So those are kind of the four themes I wanted to share. Not that these are the only 4 themes in FinTech by any stretch. But I think these are absolutely four themes that we're watching very closely, spending a lot of time on, and I think absolutely apply to Latin America. So I just want to finish with one slide that talks about why is it the QEDs so excited. And if I were talking to other American venture firms, probably what I would tell them is why you should be excited about coming to Mexico and coming to Latin America. First and foremost, it's early in the cycle. And hearing that this conference tripled over the last 2 years is great. It was even earlier in the cycle 2 years ago, apparently. But it's still pretty early in the cycle, right? I know I've talked to some of you today about, sitting here at a 500-person conference relative to the 12,000 people that are at Money 2020 last year, or whatever number of people were at the Lend It conference. Some of these things have gotten so large and so overgrown that you can tell they're past the peak. We love what we're seeing here in Mexico and Brazil. I know I've heard a lot of people talk about how different the markets are. Coming from a U.S. perspective, there's actually a lot more commonality than there is difference, would be my perspective, in terms of just where the state of evolution is of FinTech. But it's early in the cycle, and in our opinion, that's a great time to be investing. While there's 2 or 3 entrepreneurs pursuing any particular idea, as opposed to 30 entrepreneurs pursuing any particular idea. It's actually early enough in the cycle where I think most of the entrepreneurs I know would benefit from some more competition as opposed to be hurt by more competition, because it's a lot easier to change behavior with multiple people doing it at the same time. The second point here is probably going to be a bit controversial, but one of the reasons why we've, I think, liked investing in Latin America so far is that it's kind of hard to start businesses. And I'm sure those of you who have started businesses can attest to how hard it is here. And how much harder it is here, and this probably applies a little more to Brazil than Mexico, relative to how easy it is to start in Silicon Valley. And my best example here is a robo-advisor that we haven't invested in but know really well in Brazil. And a robo-advisor I talked to in Silicon Valley, which was, had to be about the 30th robo-advisor invented in the US. And it was a recent computer science graduate from Stanford, He pulled out a finance textbook, literally went from idea to beta test with real customers in 3 weeks to create a robo-advisor. Now, it wasn't as exciting as a Wealthfront or a Betterment or what have you, but it had the basic functionality. You know, I talked to the person who started what as far as I know, the first robo-advisor in Brazil, someone who was on a slide before called Magnetis. It literally took him 2 years from idea to be able to get his first customer because the idea of an ETF doesn't exist in Brazil. You know, there was no brokerage that had a custodial platform that he could use. He literally there was no APIs that existed to plug into. And so I think Mexico actually is in a better spot than Brazil, but it's still a lot harder to start businesses. And as we look for great entrepreneurs and great, businesses, there's honestly some positive selection to that. You know, if you're a good enough entrepreneur that you can get a business off the ground started, real customers, good economics, that says a whole lot about who you are and what the team you've pulled together. Now, I think we'd all benefit if it gets a little easier than it has been historically, but maybe a counterintuitive point that has actually been quite interesting to watch here, and kind of the quality of the entrepreneurs who have been able to get traction. Global trends, which I talked about a lot, I find those to be true, completely in Latin America and Mexico. If anything, they're even more true here than I see somewhere else about ideas spreading throughout Latin America and borrowed from other things. Same thing, ideas have been tested elsewhere. And honestly, early success has given us confidence. I mentioned we didn't have a grand plan to enter Brazil. We probably did have a grand plan to enter Mexico given our Brazil experience. But honestly, it kind of worked. And whether it was skill or luck, we couldn't be more thrilled with the portfolio we have. The first couple investments turned out really well and so far, and have given us a lot of confidence to do more. And I do think that's one of the big obstacles that many American VCs have is, I don't know anything about investing in Mexico. I don't know anything about investing in Brazil. I think where we come from is that I do know a whole lot about lending, and I do know a whole lot about customer marketing. And so if I can partner with firms and I can understand the business model really well, that allows me to take a little bit of a flyer on the geography. And maybe that's one thing that's a little different about us than many generalist firms who aren't always experts on the actual business they're investing in. We feel like we can hold our hat on that, and it's turned out to be so far so good. So that's it for the story. I don't know that any other session has had Q&A or had time for Q&A, or if we even want Q&A, but more than willing to take a couple questions if anyone has any. We have 2 minutes and 52 seconds. Otherwise, I can let you guys go to cocktail hour. All right. Sounds like a cheer for cocktail hour. So thank you very much. I really appreciate the time.